how firms and companies grow. You speak to an investor, whether it's a corporation or private equity firm, they say, yeah, we're here to grow. But that gets lost, frankly, in the noise, because when you speak to them one-on-one, what they're really concerned about is risk, because it's visible. And the problem is, therefore, that there seems to be undue attention to risk mitigation with less attention given to growth, and in particular balancing what I would call the opportunity-risk relationship. But when you strip away and you look at the different parts of the world, the mature economies, the US, the EU, Japan, they're very mature, slow-growing economies, and they will never grow fast again. But there's an even more important sort of wrinkle to this argument, and that's the series of pie charts. Now let me explain to you. So the green is the emerging markets. The pie is the size of the global economy. So the world economy grew 60% between 2005 and 2016. 80% of that 60% was due to the emerging markets growing. So this is when you read and you hear about, oh, the emerging markets are the engine of the world economy. That's what this is showing. The other thing that's underlying this shift is that the dynamics of innovation, of where inventions take place, is shifting radically. Mobile money was invented in Kenya 18 years ago. And we hear more and more about cashless societies. It did not start in the advanced countries. It started in an emerging market. And that trend is beginning to happen more and more by necessity. The large emerging markets have been maturing themselves, right? So the Indias have a Tata, right? China has a Costco, names that we're beginning to become familiar with. And today, about 25% of global world trade is accounted for by trade among companies within emerging markets. What they recognize is, yes, they clearly want to invest and invade US, EU markets, but they're not stupid, and they figured out, those are not the growth markets. So they're beginning to invest and trade among other emerging markets. I used to have as clients at different points Siemens and GE. And in recent years, they've actually begun to talk about partnering together to face a common rival, in particular China or India. So this is a very different world economy, how firms need to think about how they're going to grow than just even a decade ago, and certainly compared to 2 decades ago.